All right, investors, I'm going to talk about picking stocks. Now, there are many different ways to pick stocks, good investments for you personally. One of the best ways to do it is to find out if you have some kind of expertise, products that you know about, some kind of passion or service that you do, a job you might have, and then figure out if there are any publicly traded companies that are related to that topic or your work. And then try and see if you can use some financial knowledge to figure out if they're a good investment. One of the tools that is widely available to everybody, that is just one tool, not to be relied on all the time, is a stock screener. So I'm going to share with you my favorite parameters that I look at when I try to pick stocks that I want to put my money into. Now, the parameters are going to be highly personalized, so they're not always going to be the same for everyone. For me, I like to get a lot of cash back. I like value, but I also like growth. I don't want to have something that just makes a lot of money but doesn't grow and doesn't have that sustainability to it, because if it ain't growing, it's shrinking. So one of the screeners that I use is on stockanalysis.com. This is a free tool. There are many screeners out there. This is not the best one, I don't think, but stockanalysis.com I think is very good for researching the company that in question. I will show you the best screener that I think is out there for free in a second. The way you use this screener is you go to the menu, you click stock screener under stocks, and then you add some filters. Over here, you can scroll through the menu to figure out which filters are the best for you. Now, there may be some terms that you don't know about, and that's fine. What I would do if I were you, if you don't know what all these terms mean, is just start Googling each one of them and try to get familiarized. You're gonna have to do some studying. I even don't know a few of these, or at least don't have a very good understanding when it comes to like what exactly it means. Like, for example, I know that the PEG ratio, has to do with debt repayment and things like that, but I haven't really looked into it that much, and I'm not really that interested in that specific metric, right? But everything else, I'm at least somewhat pretty well familiar with. After all these years, I've managed to study all of these, and I know what they mean. For example, gross profit growth over the next 5 years, pretty self-explanatory, right? Like, how much is the company growing profits over 5 years? So FCF margin just means free cash flow margin, gross margin, etc. So these are all pretty self-explanatory. Another one that I'm not familiar with too much is SBC over revenue. So I'm going to have to look that one up. So even after like 15 years of investing, there's still things I don't know about these screeners. But anyways, pick things that you want on the screener to see, to show you, and sort the stocks through. So for example, I've clicked market cap, P ratio, some basic stuff. Dividend growth, I want revenue growth over 5 years. And then I wanted to show the gross margin and the free cash flow growth over 5 years. So I want something that's sustainably growing, basically, and something that has proven that it can grow over 5 years. And of course, past performance is not guarantee of future performance, but we know that if they can survive the turbulent times of the last 5 years, they can probably survive the next. Okay, it's a good indicator, but not a guarantee. So keep that in mind. What's important too is the type of industry it is. So when you're screening for stocks, you always got to try to keep that in mind. Different industry is priced differently, so don't fall the pitfalls of industry specific valuation. Now, market cap over here, I've clicked over 10 billion just because smaller companies tend to be a little bit problematic. There are a lot of anomalies in the smaller companies, or they're undergoing big shifts, or they're small for a reason, right? So there's a lot more that you need to look into small companies if you want to be an expert in that field. So I try to avoid them altogether because I'm not an expert in small caps, and I will get eaten alive for lunch if I try to compete in that field. If that's your thing, then you got a lot to study. Good luck to you, and I wish you the best I hope you succeed. Now, second parameter is revenue growth over 5 years. I've clicked here over 20%, which is kind of optimistic, but I wanted to reduce my search down to 20ish results. So if I click a lower revenue growth, let's say for example 10%, you see I have now 49 results. But I wanted to narrow it down, and so I go 20. You can always play around with these to try to figure out how many names you want to show up. Dividend growth over 1%. Again, if I go over 2%, or let's say 5%, the list shrunk just by 1, so perhaps over 10%. Okay, it's down to 18. So you can shrink this list and weed out some potential candidates here. PE ratio, I put just under 30, but I can make this list even smaller if I go, under, you can enter your own number here, let's say under 25. So I got rid of another company, right? And the gross margin, I just want it to be really just positive. I don't want something with super small margins. Over 50, there's only 6 results left. So I'm just going to put over 20 for now. So this is the first thing that I'll look at. Okay, besides the market cap, it's already sorted my market cap. So the biggest companies are going to be on top. And the first thing I want to look at is the industry, because I don't want to be fooled by industry-specific valuations. Like I mentioned, for example, the PE ratio in all these gas and oil companies are very low. And there's a reason for that. So that means they've had a lot of money. However, they've made a lot of money, but the market expects the price to earnings ratio to be lower in the future, meaning a higher number, or less favorable, let's say. And so that's why these PEs look so attractive. So we gotta make sure that we don't fall into that trap. If you expect the oil prices to be elevated for a prolonged period of time, maybe years ahead, then maybe it's a good idea. Maybe these stocks are a buy right now. Like Occidental Petroleum, for example, is trading at 4.84 PE according to this screener. So it might be worth a look at down the line. So there's, then we have a semiconductor equipment materials company, KLA Corporation. That's an interesting, I've never heard of that. I got to look into that at some point. We have residential construction. That's interesting. Okay, these companies are powering ahead despite the potential decrease in, the decrease in housing and construction overall that we've experienced due to financing, right? With the high rates. So that's powering ahead, which is very curious. Then we have some more oil and gas, a gold company, GFI. Look at that, at 21 PE, but it's meeting a lot of the growth parameters. So that's very interesting to me. So agricultural, that's cool. Very good price to earnings ratio in agriculture here. So that's worth looking at. Also, EQT was the oil and gas that I thought was crazy at under 3 PE. So all these, this is just a starting point, right? This is just a starting point. Let me show you a screener that's better than this one. And it's under the finviz.com. So finviz.com is a pretty good resource as well. And I like their screener better than stockanalysis.com, even though stockanalysis.com helps me research the companies better and everything is laid out really easy for me to browse through. In fact, let me show you what I mean. So let's say we take that, what was that candidate that we liked here? How about Goldfield? Okay, the only gold company here. Oh, the agricultural one. Okay, let's take CF Industries Holdings. Once you click on it, it really lays out everything you need here. So in the financials, you can sort it by quarterly or annually. You can look at all their revenues and net earnings, etc. for very long periods of time, and it's nice and clear. The graphs are fantastic, so I really like using this tool. Once you find something that you like, you can start here by getting familiar with the numbers. Another thing that I do right away is read the company profile to figure out what exactly the company does. In this case, it manufactures and sells hydrogen and nitrogen products for energy, fertilizer, emissions, etc. So read through that. I may have the either the 10Q or the 10K or the 8K, well, just really the 10K is their annual report. So I may open that up and start reading that to try to get familiar while I'm looking at the numbers. Revenue growth right here, everything you need to know. Net income. So this is yearly, by the way. Let me go to quarterly. Quarterly just gives you a little bit more definition. So it looks like it's made a lot of money in the past, 2 to 3 years. Right after, to 2020, it started making a lot of money in the last 2 years, especially. This gives you a little bit of an idea of shares outstanding, whether that they are diluting the shares or buying them back. In this case, they're buying back shares. And then after you're done with all the stuff, you can look at their balance sheet and all the graphs on the balance sheet. There's a ton of information here. Total liabilities, total assets, and statistics. There's a statistics tab. You see that the enterprise value is worth just as much as the market cap, or more or less. So that means that the company's got very little debt, if any. In this case, if we scroll down, we see that it only has $427 million in debt. You have a bunch of ratios right here, shorthanded ratios. There's even a ratios tab that you can look at. So it's very rich on information. You can see that price to free cash flow is very low, so that's very good. Same with EV to free cash flow. EV just means enterprise value. It's the market cap without the cash or debt. So you can find everything here. You can do the dividends, right? You can complete dividend history of the company right here at your fingertips. You can see that they've been increasing dividends, ever since 2013. They have not decreased the dividend, and they're still only $400 million in debt. So that's fantastic. The payout ratio for the dividend is only 10.7%, which is awesome. That means that they only take 10.7% out of the earnings to pay the dividend. So that's craziness. It's very good. So far, I'm liking what I'm seeing, right? But let's move off of this screener, and I want to show you the best screener that I think is available for free out there, which is the Finviz one. All right. So Finviz, you go to the home website, finviz.com, finviz.com, and then the screener tab is over here in the upper left corner. You can see it. And then from there, you just click on these little tabs here to figure out, because they're nicely grouped, to figure out all the different parameters you want to check out. So I've done 4 descriptive filters and 6 fundamentals. I don't like to touch the technicals because the technicals don't really mean that much to me personally. So some people love the technicals. That's just not me. So everything that you do on there is going to be pretty personalized, right? So if you're a technically based trader and investor, trader, then that's going to be very important for you, perhaps for quick filtering or on specific pattern that you're looking for or anything like that. Finviz does that for you. Not many screeners actually screen technical patterns. So if you're into that, that's a good one for you. Okay, it's another reason why this screener is so good. So here's what I've picked for my 4 descriptive parameters here. I got market cap. I want it a large company. I want positive dividend yield. I want it financial sector, so you can choose by sector here. And then locally based in the US. Just because of foreign tax and all that stuff. So just to make it simple. Plus, I'm more familiar with the U.S. economy and the way market works here rather than abroad. But I do and have invested in many foreign companies. So I'm not afraid of it. It's just they usually, there's more risk there. So on the fundamental side of things, I've picked a low PE, meaning like 15 or under. So I'm just definitely looking for value on this round. Return on equity, I want it to be positive, but you can do over 5%, over 10%, over 15 here. All right, let's do over 10. Okay, so now we got a 17 ticker list, and then price to free cash flow, I want it to be low, under 15 in this case. The sales in the past 5 years, let's say positive, Okay, we got rid of one company. And then net profit margin, I want it to be positive. I don't want too many things to get eliminated, but I don't want anything to slip through the cracks either, right? I don't want something that has had a profit margin in the negative, that means that had a losing year or something like that. I just don't want it in there. So it filters it. It's just worth clicking on positive or negative on some things just to get rid of some surprises that you may not need. So the other ones are EPS growth past 5 years. So that means earnings per share. That's what EPS stands for, growth over the past 5 years. So I wanted that to be positive as well. And then return on asset, I want it to be positive. Let's see if we can do over 5%, and all of them disappear. Isn't that funny? Okay, so return on assets positive. We get a list of 17 companies. Interestingly enough, the number one, you can sort them too. You can click, let's say, by market cap, right? If you click twice, you reverse the order. So Goldman Sachs is on top of the list, which is ironically, one of the companies that are actually on my watch list. Like, I have traded that company before, and I'm looking for opportunities to invest in Goldman Sachs. I really like that company. It's a really good money maker, and they operate with a lot of debt, but they also make up for it for excellent maneuvering through the financial world. So I do like Goldman, and that's the number one company here by size that fits these parameters. Then we got Charles Schwab and PNC Financial. So this is the financial sector again, remember? So that's not, it's not a coincidence that all of these are in the financial sector. USB, okay, US Bancorp is another one that I have been watching, and I even made videos on US Bancorp, so you can check those out. So it's bringing me all these banks. If I want to sort by PE, I can do that. Let's go for lowest PE first. That's the only bad side about Finviz.com, it spits ads at you every once in a while, but I'm okay with it. So the lowest PE on this list is a $37.5 billion company named AIG. You guys might remember this one, but it's got a PE of 4. Now this is pretty good for a financial company. Even this price to earnings ratio is not bad. It's traded very lightly. Volume is only 4 million. So it might be worth looking into this company. Now, this Finviz is not the best for looking specific companies up, but I'm going to click it just to show you. So it gives you the little bar graph here. You can switch that out. They want you to buy a subscription in order to get some more details on the graphs and whatnot. But this is good for getting a quick overlook of all the metrics that you need. But I would definitely switch over to stockanalysis.com at this point to try to figure out, from a more graphic manner, what's been going on, with the company. But from a quick glance, you can see how big the company is, how much it's making, 10.25 billion in the past year or so. Or actually, I don't know if this metric is last year or year over year. Sales, 56 billion. Not really that relevant for financial companies. Dividend is 2.5%. The number of employees 26,000. It gives you the PE here, forward PE. It gives you the price to sales, price to book, price to free cash flow is really nice as well, and a bunch of other metrics. The other ones that you can take a quick look at here is the profit margin, which is 18.2%, which is really nice. And then what else can we look at here? Let's see if it's being targeted for short interest. It looks like the short float is only 1.25%, which is not very high. The short interest is 9 million, which is not that high. Price target for analysts means that basically they expect the price to be higher than it is right now. The green metrics are usually good, obviously, and the red ones are usually bad. But most of the metrics that are red usually have to do with their performance, with the stock performance. When you see value and this performance is dropped, and but that isn't significant. But it is significant because it means that if the stock is dropping then there's probably a good reason as to why the stock is dropping. So that means you have to do a lot of research. ROI, ROE, ROA, return on asset, return on equity, return on investment. You'll learn all these terms as you go along if you don't know them already. So you can look at these metrics. And then, finally, like I said, you can switch over to stockanalysis.com. This site also gives you, if you scroll down, it gives you a downgrades or upgrades or reinstatements or resumed. Goldman Sachs, for example, thinks that as of October 10th, 2022, that this company is a buy. Jefferies upgraded in the same date almost from a hold to a buy. Morgan Stanley thinks it's an overweight since November. BMO Capital Markets, those like to rate companies quite a bit. It says market perform, so it's about even. And then we have a downgrade in this February from Atlantic Equities. And then there's the news cycle here, a bunch of news articles that you can check. So there you go. I mean, you got the screener, but again, it's not just the screener, okay? Use other methods of searching for companies that you like. So this is just one of the tools. For somebody who doesn't have a lot of time to visit companies himself, this is very useful for me, but there are many other ways besides the screener, okay? Because sometimes you're missing out on a lot of gems, because the screeners, guys, are available to everybody, right? I have a screener, you have a screener, Joe Schmo has a screener, Warren Buffett has a screener. He doesn't use it, but he has access to one. I'm sure he doesn't. Maybe his underlings use it, but it's a tool that everyone has. So the competition there's no piece of information that you have that other people don't. So you may want to start looking elsewhere. Like, look around where you live. Okay, look around the shops that are coming up if you want to invest in retail or something like that. Look at some local companies that are mining around in your state. Okay, just do some Google searches. Go there. Like, if you have time, go and speak to their representative or something. Go speak to the employees. I used to do some of that. I did on the ground research on some companies before, just because I wanted to know more about it. Like, I'd walk into shops and be like, how are the sales? Which products are the most in demand? Is it different than previous years? Like, try to ask them poignant questions to the employees, and they'll help you out, because they'd rather probably talk to you than do like a return order on some customer. So foot traffic kind of research is in a way more valuable than just sitting through screens and filling out numbers and trying to pick the best performing companies on numbers. So also make sure that you are very informed. Check out older news cycles months back or sometimes years, just to figure out what the big events are in the company. Like, don't leave any stone unturned, basically, when it comes to this. And also, like, I keep saying this 3 times now, but industry specific risks. Some industries are very cyclical. They go in waves. Sometimes they make a lot of money, then they go through droughts for like 10 years. So just make sure that you know what you're getting into. Look at the past performance of the sectors. Watch some videos on specific company or in specific sectors, right? So specific industries is what I meant. And see what the experts are saying. Like, why is there a downturn? Like, I used to listen, a good guy for like silver and gold and resource miners is Rick Rule. He's been around forever, and he's quite educated on these things. So I like to listen to that guy when it comes to the cycle. He's nailed it for me. At least the way I interpret his words, he's pretty much nailed the cycles ever since I've been hearing about these industries for the past 15 years, basically. So he knows what he's doing. But there are others, that are managing a lot of money. I would probably listen to people who have a lot of money or who manage a lot of money themselves, or maybe their own money or some funds. Just try to stick to those guys, not so much individual CEOs of companies, because they're probably, everything is always rosy for them, right? So I would take everything they say with a grain of salt, even if they're really knowledgeable and really good people and very honest and direct people. It's still, they're going to try to put their company or their industry in the best light possible, given without telling any mistruths, right? So, anyways, those are some methods of how you can pick stocks. This is how I do the screening, but I'll choose different parameters every time. I don't want to be just single dimension, type of stock picker. But stock picking in general is not my strength, anyways. I'm just telling you how to do it and what you can do. Like I'm more of a generalist, and I like to take, my strength is basically taking the bias out of the entire thing, but I'll still look at, individual companies to try to figure out if there's a good deal or not. Just be careful. All right, that's it with picking stocks for now. Mic drop.